Alright, what's up guys? Welcome to another live session. Today is June 13, 2020, and you are back again for our profit recap and next week market insight session. I hope you guys all had a good week trading. And so today's session, if you're new, we're going to go over the trades we took this week, wins and losses, then do some analysis for next week so we can get prepared. Before we do that, some announcements. First thing, if you're not on the community Discord, you need to get on. It's free to get on. The link to sign up is in the description of this live video. Make sure you sign up. This is where all the magic happens, and we get to communicate with not only me but other traders as well. You can also see things like reviews and gains, etc., etc. So that's the place to be. And we also have an announcement section where you'll learn about what's up with our company, what we're doing, etc., etc. And so one of the major things that we've been talking about these past few weeks is the Smart Effects Man program. Now, if you are a Forex Lens member or you've joined the live stream, you should know that one of our traders, Institute Trader, he trades totally differently to how the retail traders trade. He trades based on institutional concepts, tracking smart money orders on the weekly, even monthly time frames. And this strategy is so accurate, and the drawdown is so little. It's actually amazing. For example, we can look at the default. So this is like normal risk settings. You can see the gain is around 10% right now, and he's averaging around 6 to 10% monthly on the default settings. And the drawdown is very low. Rarely do you ever have the gain greater than the drawdown. So 5.82% drawdown. It's fantastically low. Now, if you're looking to kick up the gains just a bit, then you can go for the aggressive version, and this is doing 32% per month. Again, the drawdown is still at 5%, so because of ATC, you can increase the risk, decrease the risk. It's all up to you, and again, the minimum balance is only 3K, so if you just want to try it out, you can try it with 3K, and then if you like what you're seeing, which I'm sure you will, you can always add more. But if you're interested in getting in on this, all you have to do is email support@forexlens.com, or you can get on Discord and message Allison, and she will help you as well. And that's one of the ways where if you don't have time to trade, if you're going back to work, because economies are opening up, if you're going back to work and you don't have time to trade, I definitely suggest you try out Smart Effects. The other thing is our Traders Challenge, and so this is a simple way where traders can not only win a lifetime membership with Forex Lens, but also get a funded live account, which is 25K for right now. So all you have to do is grow a demo account once to a profit target, grow it a second time, and after the second time, you'll get a live funded account. The only requirement is that you be a Forex Lens member. That's it. So if you're a Forex Lens member, you have nothing to lose and everything to gain by doing the challenge. It's completely free. If you're someone new, at the end of the session, I'll be giving away a 50% off coupon code to actually join us, and then you can maybe even sign up for the session for the Traders Challenge after you sign up. So that's all the announcements. If I do think of any, I'll let you guys know. People on Discord, send me any questions on community discussions. That way everyone knows. Now let's see if there's some questions here for today. And when you get on Discord and you become a member, you're gonna have me and obviously all the other traders as on-demand mentors, which you can ask us questions. So best place to be, and I love it. It's a lot cleaner than Telegram. Anyway, so we're gonna go over this week's trade. So this week we took about 5 trades. One was a loss. We'll go through everything really quickly. So the first trade was a Euro NZD short. Quickly shift over here. You can see we got entry after the 4-hour candle gave us a nice inverted hammer, and we got a decent move to the downside. Up to 87 pips, depending on where you closed off of. I believe for this I got my 40, and I was good because I was going to sleep. But our strategy is based on the 4-hour time frame, and we go based on price action, and in particular this one candle for shorts, and this other candle, 2 candles technically, 2 candles for shorts, 2 candles for buys. But this inverted hammer was our entry for shorts. We had support here by this blue line. We had an inverted hammer. We entered short, and it was a nice simple fallout. And so we actually went into some profit before price came back and stopped out our partial position. But I told members to re-enter because we just came up and retested support, and I knew we were going to go down a bit more, so we actually went down quite some bit after that. So that was one trade, and again, we highly emphasize that once you're in profit, 25 pips, you secure some, or we can secure all. So I know certain members that they go in a full lot at 25 pips, they're done with the trade. And again, 125 pips per week. That is, if you make 25 pips a day, 125 pips per week, you make that consistently, you're probably better than 99% of all traders in the long term, right? So some traders, what they're doing right now is working for 6 months, 7 months, 1 year. But if you look at a 5-year track record, they most likely will end up blowing their account somewhere along the line. So this strategy is, it might not be as high volume, but you're definitely going to get a guaranteed 25 to 40 pips at least per setup. So that was the first trade we took. The next one was a simple short for NZD yen, and this was a fantastic short. Brought us quick 80 pips, and so we took it off this 4-hour inverted hammer, right? And you can see here the wick to the top is longer than the one to the bottom. We entered on this simple candle, and you can see how much price dropped, right? So price dropped upwards to around 77, 80 pips depending on entry. We actually got a pretty decent entry at 70.670. So that's what happened there. And then once we dropped that much, I told members to actually put stops into profit, just because after you have 70 to 80 pips floating, you'd be a fool not to secure some profits and move stops into profit. And so that happened, and so price came back and came up 15 pips away from entry. And so after securing profits, that small position you had running would have got stopped out in profit. So that's why later in the week yesterday we got a short again for NZD yen, and it played out just as well. So that was the other trade, and then we had these two trades for FOMC. They're entered right before, and I normally don't trade news, so I don't want that thing to go out there. Just because you do something once doesn't mean that's who you are, right? We just knew that based on the predictions, we knew they're going to keep interest rates the same, and we also knew that the technicals for this as well as this setup were showing USD weakness, right? So quickly, if we go to USD CHF. So here we have it. So here's the short we took, and you can see, this thing went down a lot, right? So at the release, it went down to our TP1. Both of these trades went to our TP1. So I gave traders a heads up, hey, we're 10 minutes out. Feel free to close 20% of your position at -5 pips. This was just because this was more of a riskier trade than this one. But anyways, after the initial statement, both first take profits have been hit, with more needs to come. Move stops to entry and secure some profit. If the profits look good, secure all the profits and end the New York session stress-free. So if trading news is like too scary for you, then you can by all means close the trades and profit, right? So this thing continued to drop while we were looking at the release, and just look, we made quite a lot on this. So it almost went to 90 pips. This one, so I think I secured 62 on this one. Luckily, most of the moves that happened were during the New York session, so I was awake to kind of manage the trade. So that we had that, and then I told traders, hey, pound dollar looks pretty good. Even though it hit our TP, it came back and stopped our partial at entry. So I said we can go long again, but with the reduced position size of 50%, just to minimize the risk. Now, if you look at the stop loss, you can see it's around 64. If you divide by 2, that's around 32 pips. So, when we enter with the reduced position, the stop loss is getting cut in half. And so, we did take a loss on this trade, and that was the only loss for the week. So, 33 pips. And then, this is why I put a huge importance on 50% of the position. So when I say that, always make sure if I don't specify my signals, that means enter with the full lot. What you usually enter with. So USD CHF was great. Went as far as 60 pips yesterday. I always tell members, once you get to 25 pips and over, you have full luxury to close out whenever you want. You don't have to wait for example, TP2 to come or TP3. And you can see, after that, 88 pip move, price started to revert back, and it came past our entry. So again, if you're floating in 60, 70, 80 pips in profit, why would you not secure them? Because you're gonna have these type of moves. especially when there's a lot of fundamentals going on and a pandemic, a trade war. There's so much stuff going on that these type of moves are going to happen. And to be honest, this previous high that we made, this high right now, has yet to clear this one. So we're still technically in a downtrend. So we could possibly go short from here. So that's USD CHF, and then we had these two beautiful trades in Aussie yen and NZD yen. You can see yesterday I told everyone, hey, NZD yen's up 50 pips, secure some profit or all, move stops in into profit. And I said 10 pips because it's all personal preference. Aussie yen went up 70 pips into profit. Again, same thing. I wanted to call short for Aussie dollar, but because we're already in two trades and it was coming to Friday, my risk management is pretty strict, and so I just held off on it. So I'll just quickly talk about NZD yen. So here you have it. Again, this is just based off a simple 4-hour closure that we have to trade. I don't know why this thing's coming up. So this black line is a 4-hour support, and you can see once again we got that inverted hammer close on this candle, and then we got a nice short down. And so this is a decent amount of pips that could have been made if you just took the simple trade off one 4-hour closure. You didn't have to wait for any MACD crossover or any stars to show you where to go. It's just simple entry. So a potential of 56 pips, right? Not bad. And then you can see again we had this reaction. So we had a reaction around our TP1 area. Price snapped back and then went to our entry. And again, this is just a deep pullback. We're still in a downtrend, similar to USD CHF. When you're in a significant downtrend, it's very rare for price just to reverse out of nowhere at no key level, because there's no support here. And so it did a deep pullback, but again, you can see this next candle is on its way down. Again, the inverted hammer. So if today wasn't a Friday, I'd get traders to enter once again, and that was a perfect setup. And the other one was Aussie yen. Very similar again, the 4-hour bearish candle closure, inverted hammer right here, and just because of that simple candle, we got pretty much a guaranteed 76, 75 pips, right? And again, price has come up past our partial. Oh, and here we have another alert coming up, and you can see price has pulled back, and this candle is very bearish. It's telling me Aussie yen is going to continue to melt. So again, just don't get greedy. This is a market where 95% of people don't make money, or actually 90%. So if you want to be at 10%, you have to do what others don't, and stop trying to flip accounts and just get those nice clean moves, and you'll be good to go. So that was a week, and now I'm gonna be looking at pair recommendations and questions. So if you're on YouTube, send any questions or pair recommendations you have, and I'll give my opinion or just answer those questions. So okay, I pulled up YouTube. Let me actually get people on Discord. Yeah, so Aussie dollar, yeah, it's like every other day, risk on and risk off is happening. Let's take a look at Aussie dollar. So here, I actually sent an idea yesterday. So here's my analysis. This is just at 5 p.m. the market closure, and you can just click play. You see Aussie drop maybe what? Maybe around 20 pips, and then it pulled back. But just based off this, I do think Aussie's still going to go short. This is a similar pullback you're seeing on, for example, Aussie yen has a similar pullback. NZD yen has a similar pullback. Let's take a look at the chart. I think we'll continue shorting this, no doubt. Because the second wave of Corona is becoming imminent, I do think that a lot of the pairs will go back to their Corona levels or their Corona ranges, right? So you can see, this is simple price action. We have a 4-hour support here, which we took a short on right after we broke it. Price came back, we tested it. We have a rejection here. I do think it's going to be a downside movement. Just to be absolutely safe about this trade for next week, all we have to do is wait for this previous low that we've created to get clear, right? So that's all we need to do. So I'm just going to remove this trade idea since we haven't even entered it now. But if you just move this up here, you can see this is the level we need to break to continue that short. Now, if you look all the way to the left, anytime we come below this level, for example here, we do head down to this next support, right? So that's where price will be pulled to. There is a trading range from here to here, and we need to satisfy that. So just to make sure price doesn't come here and then rebound, we got to make sure we get that 4-hour bearish closure down here, and then we can take a simple short. You guys remember when before all this pandemic started, we had some really nice swing trades for NZD and Aussie just off this simple strategy. So hopefully we can get that. Because of the constant tensions, a lot of the moves haven't been clean, so we weren't able to really get any swing trades that are really going other than Euro and OK. But this is what I see, right? So we need to break that. 2.62 is a pretty decent R2R considering the downside goes all the way to this blue zone. If you look at the daily, you'll see the daily is still bearish. For the daily candle, you can see the top wick. I gotta move all these. You can see the top wick is still longer than the bottom wick, so this is still an inverted hammer. So the bearish momentum is still there. And I think today is just going to be an off day where Aussie will make its gains back. Not all of them, but some of them. Where Aussie will lose some of its gains today. And then Monday morning, we should see Aussie back on track for short. So I am bearish, despite the Fed keeping interest rates the same and having a bearish tone. If you remember during the pandemic, the dollar was keeping all the majors in check, right? Euro, NZD, and Aussie. So if the second wave starts coming up again, and it already is in the U.S., we should see the dollar start to take advantage of some of the weaker majors. So that's what I think for next week for sure. I think the shorts will resume. And you can even see, looking to the left on the daily, we have this daily range right here, right? This segment all the way down here. If you look to this week, we're technically already halfway there. So we do have this other half to go. And once we break this support, then we have confirmation that this bottom half is about to happen. I think that the same could be said about NZD as well, NZD dollar. Alright, let me quickly check YouTube. Silver. Okay, what's up, FX? Bro, what's up, Taha? Salman. Let's see. And I gave a silver setup just this week, so I understand why it's being asked. Right, so silver, okay, short. So last time we talked about silver, which was I think a few days ago, I talked about the potential of silver, coming up to this 1840 level. If they came up here and we saw rejection, that'd be fantastic. We wanted some type of wick into this deep price zone to show us that we're actually rejecting it. If you just look to the left, oftentimes we come up into 1840 per ounce, and then we drop down, right? Again, here we have these huge wicks. This time around, we never had that. This came pretty close to 1840, but not really. It hasn't really made a real go at it. And so that on the 10th, which is a few days ago, I told members that, hey, if you want to short silver, let price actually come up into the zone, and then look for other wicks like we've had in the past, or just a bearish rejection, and then try to go short after we break this 4-hour support, right? That 4-hour support is at 1740. So this setup still stands. You can see since then, price didn't even have the guts to go up here. It's actually pulled back down. So if we get a 4-hour break about of this level, I do think we have a nice short. The R2R is almost 4.0, and it may look like a swing trade, but depending on the volatility, you could have this whole trade play out in 1, 2, 3, 4, 5, 6 days, right? So technically a full trading week. So we will look out for this on Monday as well. And if you just look to the left, you can see why. Actually, maybe the monthly and the weekly will get better. So if you look at the weekly, you can see why we're kind of targeting this short. Again, this blue zone covers a wide range of movement, but we just try to cover the top lengths of the wicks, right? And so 1840 is that resistance. You can see this week's weekly candle is pretty bearish if you ask me. We were all the way up here, price got squeezed all the way down here. So that's a pretty tough scene for silver, to be honest. So I do think you could have a short. And so again, next week we're kind of riding on dollar strength, and if Aussie dollar is going down, so will silver, and I think that's what we have to watch out for. Yeah, silver. I do have an alert for those that are wondering. My alert's at 17,300, and the Forex support's at 17,400. So there you have it. Someone asked about SPX. Would you say there is any correlation between SPX and Aussie? If yes, is there a reason for that? Now, I've never even explored that option, but what we can do is just pull up two charts and see. The S&P 500 is so easy to analyze in terms of technicals. It's actually crazy. So here we have Aussie weekly. Let's take a look at the. I can already tell it's not correlated in my opinion. Here we'll go on the daily. So this is how the daily looks for Aussie. Let's take a look at the S&P 500. Yeah, there is some correlation. There is. Maybe it's just with all the majors. Let's see. Euro. Yeah, I mean, technically, wow, Euro has a nice short too. I mean, if you look at, so let's just go back. You know what, I should just put two charts. So here we'll have the S&P 500. So if you look on the daily and you just pull over to euro dollar, right? You can kind of see, right? They're pretty similar. So whenever S&P 500 drops, so will the euro. So if you're a stock market trader and you see this dropping, head over to the Forex section in your broker and then enter the short. But yeah, they are correlated. Heck, I'm pretty sure even NZD dollar and S&P 500 is correlated. Yeah, this you can see. Although the moves aren't exactly, but when this is dropping, so is this. And so we had a previous idea for this S&P 500. We had a first target of 3,250, and we went to 3,240. So bummer, but anyways, it's not really a signal, just some advice, but pretty sure, hopefully you secured some profit. This thing went up 140 points in a jiffy. Since then, this thing has pulled back. So yesterday was a down day, obviously, because of all the tech companies just going down. All the tech companies basically stumped last night because of the prospect. I don't want to say the chance, but prospect of a second wave coming back stronger. So the tech stocks were the only stocks that are keeping up the S&P 500 this whole time, but those are slumping, and so there's a correlation. But I mean, next week is going to be an awesome week. I mean, there's even a short for NZD USD. Here's our long from a while back, which is absolutely fantastic. I'm going to move it now, but I mean, here we have the 4-candle inverted hammer. I'd actually take the short now if it wasn't a Friday, but you can see what we can target. You can target this trading range right here. Right, from this resistance to this support. We do have the momentum, so this is a nice bearish inverted hammer on the daily time frame. So I think this is, Monday is gonna be a pretty good day if all this price action just freezes. I don't want stuff to go crazy over Sunday, but this is gonna be good. And then if you also look at Aussie dollar, it has a similar short setup as well. So, and euro really quickly. My goodness. Perfect. So we had a potential long, and this was before the FOMC. We didn't take the setup, and thank goodness we didn't. We were more likely to go for USDC check. But if you look at it daily, you'll see, you ask any beginner trader, and sometimes trading you need to keep it simple, right? Don't try to be a genie and try to see things that aren't there. Just look at what you can see, and you can see, price came to this kind of secondary resistance right here. Previous high we made in the past quarter, right? we came up and we didn't even have enough volatility or buyers to go up to this high we made just a few weeks ago, right? We couldn't even go to there. So we had that, and then we had, an inverted hammer on the daily yesterday, which you could have taken a short from, and then another inverted hammer today. You can just look in the grand scheme of things. We identify some support down here. Now again, I'm talking about peak pandemic numbers, right? So if we go to peak pandemic numbers, this is where Euro USD went, the lowest it went during the pandemic, right? And if the second wave's coming, if you put two and two together, more likely than not, this is the type of trading range we could have, and this is the type of move we can have to the downside, right? So again, I hopefully for people's sake and for many of the poor people at risk out there, I don't want a second wave. But if a second wave does happen, God forbid, I do think a lot of the the financial instruments like CFDs, Forex, futures, options, stocks, indices will all go to their levels that they were during the peak of the pandemic. So next week's gonna be a pretty dang good week for the majors because we'll be shorting all of them. And it looks like this is a lot of momentum. This doesn't look like a regular pullback. Usually when price pulls back, it prints these hammers, right? So you have these bearish hammers, and you push up to the upside. But rarely, when you get inverted hammers on such a degree like this, where you're clearing the previous low, like this one, it's usually an indication that the trend's shifting on you. So that's what we're gonna have next week. I don't want to give anything right now because a lot can change from today to Sunday to Monday morning. But I'm pretty sure we'll get an entry regardless. If our patience is there and price comes down here, no problem at all, because we can just wait for the break of this level and take the short down here like we've had in the past. So Euro, NZD, Aussie dollar, all shorts. It'll be interesting to see how gold reacts. Perfect Aussie CHF. When I first started trading, that was one of my favorite pairs to trade. A lot of these CHF pairs respect levels pretty nicely. Take a look. Yeah, I think because Aussie is going to be falling next week, Aussie CHF should go down as well. So the monthly looks a bit suspect for longs, and then the weekly. The weekly is not bad because it's still a bearish hammer. You have the long wick to the bottom, then the top. The only problem is that if you look to the left, you can see this trend line that I drew. And I'm not too big of a fan of a trend line, but I do think it's a nice tool to teach young traders, people that are new to trading. You can see, we're an arm's throw away from this trend line, and so even if you try to go for a long, there's not much upside potential here, right? It could easily be cut off, and so I think that's why the short would be the best case. Now let's see the 4 hour time, the daily and the 4 hour, see if there's any entry. So here's why we have that bearish hammer on the daily candle. We have this candle right here, and then we have a bullish hammer. So we have two hammers making that daily candle bearish hammer. And so all we need to do is go to the 4 hour time frame, identify our supports, and then we know where to enter. So in the 4 hour time frame, you can see we had a sell off here, right? And once again, right, we have this key level. And what happens when we break that key level? We print a bearish hammer. We don't enter on that trade. But the next candle, this one right here, is an inverted hammer, right? The wick to the top is longer than the one to the bottom. And if you enter just on that simple candle after printing your key levels, you could have made 72 pips just after seeing that one inverted hammer, right? Once you have your levels plotted, look out for an inverted hammer. When we want to go long, we look out for bearish candles like this. There's no wick to the top and bottom. So if you look at this candle, and you rarely see these candles, but these are your telltale sign of a long, where there's pretty much no wick to the top and bottom. This is a long candle. You can see prices explode. And this is the second candle we like to see when we go long, is a bullish hammer. The wick is longer to the bottom than the top, and then you have bullish momentum. So here we have it. That simple inverted candle could have bought you 72 pips, right? Now, if you look at the price action, it's very similar to the NZD yen. We just showed the Aussie yen, where price had a steep push down and a sharp pull back to kind of retest the support. And so I think we're going to reject this support, and go all the way down. But just to be clear and be safe, what we can do is wait for price to clear this previous low we made, right? So we made this low just yesterday. Now if we clear it, right, price can drop all the way down here. Then we have a nice short. We can just pull back on the daily to see where we're going to be going next. So in the daily, you can see the last time around when we broke these two key levels, right, this black line here and this white line here, price went all the way down here, and these were the peak pandemic numbers, right? This is where price was during the peak of the pandemic, and we're starting to come into that range again. So we have a lot of downside for Aussie CHF as well. It'll be pretty interesting to see which setups we enter next week, but here you can do a rough markup of this trade. Here's our intraday trade, right? And we have a stop loss in between this range and this range, which is all the way down here. So here, that's our first target, 3.4 for the intraday. And for my swing traders, this is swing traders galore. We have a 7.84 swing R2R setup. So everything is looking like it's going to go down. Nasdaq, S&P 500, silver, gold, copper, rubber, everything's down. So that's what we're going to be doing. So yeah, Aussie CHF, I think short will be the way to go. And I'll put an alert because once you cover a lot of setups, we're going to have to figure out which one we want to go with. So my alert's going to be very simple. It's going to be at just below 0.64 thousand, crossing down. And again, the 4-hour candle and 4-hour time frame is key. We're just on the daily to give you guys a clear big picture. So awesome. Let's see. Euro yen. Okay, euro yen. All right. Oil and GA. Okay. Morning, Jonita. Aussie dollar and NZD. So we just discussed that, but I'm short for all of them. So really quickly, I'll show you NZD. Short. So the daily candle, right? It's an inverted hammer. Now, hopefully today's daily candle closes bearish. If I remove this intraday level, we already have our take profits in line, right? So this will be a nice first target right here. Actually, just above right here. So our first target would be around 70 pips away, right here. Our next one would be around 82 pips away, and then finally we can target this blue zone. So I'm looking for shorts. I think today, NZD will lose the gains it made yesterday, as well as the Aussie. But if you look at the 4-hour time frame, you can see what we need to do. So again, yesterday, we had price, and I keep repeating myself, but I want to show people how simple the strategy is, and you don't have to wait for me to call trades. That's the whole point of this, is to learn the strategy. Here we have a key level, and what do we have again? An inverted hammer, and after that inverted hammer, price went, and this is just so simple. Inverted hammer after the break of a key level, price went down 50 pips, a free 50 pips. Since then, it's pulled back to retest that exact support area, resistance area, and price rejected it nicely. Just a few minutes ago, this candle was nice and closed. It was looking very bearish, but buyers have pushed it all the way back up. And so this is why I told you guys that I'd rather have us clear this low we just created yesterday to make sure that the trend is still intact. Because what could happen is price comes here, right? And then everyone gets excited to go short, but what happens is it slaps you in the face and it goes back up. So you can see right now price is pushing back up, and a lot of sellers are probably getting stopped out as we speak because they probably entered when this candle was down here, and then they got pushed all the way back up. So on Monday or Tuesday, whenever we get an entry, we're just be waiting for this 4-hour low that we created yesterday on the 11th of June at 5 p.m. We're going to be waiting for a 4-hour bearish candle, an inverted hammer, or just a big bodied candle like this one with 0 wicks top and bottom. I'm going to go short. Our first target is around 40 pips away with this adjusted entry, which is still fine. And then we have all this to go downside. The same thing I can say about Euro. Again, we just talked about it, but NZD, they're pretty much correlated. So this is NZD. Let's look at Aussie dollar. Again, same thing, right? So again, we identify this 4-hour low. We want this candle to reject this level, but also clear the previous low to ensure the trend is still continuing. We don't want to get stuck into this funny business of coming here and then price reversing on us. This is terrible, right? So that's my bias going into next week. Oil, let's take a look at oil, how oil is handling. So a bit of a messy price action for oil, but it's been a tough week for commodities. See this again as a similar kind of move. So yesterday had a pretty steep fallout, but then during London session, this thing just snapped back up. And once again, this 4-hour candle was down here, right? It had a whole body down here looking to go down, but since then, buyers have pushed back up considerably. So, U.S. oil. I mean, I'm thinking of maybe long next week. Especially if we start piling on candles. If candles start building up here, right, and you start printing some hammers, the candles printing up here, just creating hammers, right? You can see in the past when we've created these hammers at the support, you see U.S. oil just launch up. And so if we start doing that here, I do think we can have a similar setup like that. But if we start shorting euro dollar and all the majors, then you should see oil start to come down slowly as well. But oil is heavily inflicted by fundamentals, right? Especially with Russia and Saudi Arabia still going at it to this day. I mean, a lot of that's affecting it. So depending on how it looks Monday, we could have a long. I mean, you can see, the past 3 candles were hammers in themselves. So this is a bearish hammer, bullish hammer, and a bullish hammer. That should tell you something, that there's a reluctancy to go lower and people want to go higher for US oil. So let's see. But for now, I'd say mixed but leaning towards long. Monday we have another free session, so I'll give you more insight then. And GA. So I haven't traded GA in a while. But you guys are quite a fan of the pound pairs. GA had a pretty tough day as well. I mean, this 4-hour candle. I'm not sure what's going on this morning. The fundamental schedule wasn't too bad. Oh, I mean, that is GDP. So the pound GDP came out worse than expected, negative 20%, negative 20.4. The rest of the morning was pretty quiet, other than the consumer sentiment. Just came out pretty nice. Again, this is no surprise, as people of the nation are being told we're opening up restaurants, bars, etc., etc. So, anyways, yeah, this 4-hour candle is an indecision candle. This is when the wick to the top and bottom are equal in size. It's really hard to trade this candle. So last time around when we were here, we were waiting for a break of the support to go short. We never had it, so I'm going to remove this for now. For this setup, that price action is just ugly. So the previous 4-hour candle was fantastic. So this inverted hammer was great. And again, if you just took a trade based off of that, you could have made a nice, 50 pips. Since then, it's pulled back, and now it's in a tug of war, right? It's in a tug of war. But based on this sharp pullback, I would say short, and that this is a pretty bad GDP, to be honest. That's a lot of shrinkage of an economy. So I'd wait for this 4-hour candle to close, and even maybe today's. Wait for Sunday. I don't trade Sundays, but wait for a Sunday or Monday, and see whether if this candle has come down like this. Now, if it has come down like this, then we can take the short all the way back down to here. Again, talking about peak pandemic numbers, and this is very close to that, so we could go there. Otherwise, if price on Sunday makes its way back up here, and we'll start looking to go long. Initially, I had a long bias for this because I was bearish on the Aussie, and I still am. So technically, if next week we short Aussie dollar, we should have a long for pound Aussie. So that's probably the best bet for this trade right now. All right, let's see. Any other questions? Please let me know. Let me just check the audio. Oh, it's pretty loud. Confirm the audio is fine. It's pretty loud if I go full volume. So let's look at gold really quickly. Why not? Gold tends to react pretty volatilely during these times. And surprising. They didn't really have any separation this week. Pretty consolidated. Still stuck underneath that. Let's see if I can get my old chart for gold. Oh, and another trade we took this week, and I'm actually so angry that I wasn't able to get it. But again, this was a gold trade that I think a few of my members got. I know one got it piece late for sure. It was a simple long after a trendline break and a 4-hour bullish closure above the support for gold long, and this thing just absolutely rocketed. This 4-hour closure happened during the London session, as do a lot of moves. So for me, it just sucked. But this thing just launched up, and you want to measure, price movement. I mean, my goodness, that's 300, almost 400 pips. That's 330 pips. Just like that, just from a simple 4-hour closure. But since then, during the FOMC stuff, gold did wick up here to our 1745 resistance and pulled back a bit. And since then, it's just been consolidated. It hasn't really been doing much. It's bobbing and weaving. So I think for next week, what a beautiful setup. I think for next week, what we're going to be doing is waiting for 1745 to get cleared, and then we can target this high. And we know this high has been, holding down gold for so long now, 1765. We have just not been able to cross it, right? I have a long-term bias of 1800 for gold for 2020. We went as high as 1765. I do think that price should make its way back above and we go long. But next week we're shorting the majors, so technically we're going for USD strength. So we should have, gold drop. But sometimes gold and the majors aren't correlated that way. You will often have gold go up and the majors go down, so just be careful. But this was the simple gold idea we had. And all the chart work I do, I send it on Discord. So here you see gold long, 4-hour bullish closure above 1700 is a requirement. And what do we have? Here is 1700. Here we had a bullish hammer, and the rest is history. So next week we could have a short. Obviously price action's been conflicted these past few days with all these wicks. But depending on what we see on Monday, we could have a nice short all the way down here. Otherwise, if we close above, we have an equally nice long trade to 1765, and then maybe 1800. So that is gold. It's a pretty good week. Again, one losing trade, and these past few weeks we've been having either one losing trade or zero. So the past 4 weeks now, I think I've only had 3 losing trades, and all the results on our website. So again, our pip count may be down a tad bit, definitely not these past 2 weeks, but the accuracy makes up for it, and I think that's what makes a good trader, is being accurate. How correct are you, out of 10 trades? So I think that's good. I think everyone's good. Everyone had a great week. If you made some gains, make sure you post them in gains reviews. It means a lot. It actually makes our day when we see traders making money from our trades, IT's trades. We have one trader just killing it with his challenges. We have some, making great gains with Institute Trader, and he's one of the MAM traders. Institute Trader and Pipsology. These are also institutional-based traders. Here we have some trades people took on their own. And then here we have some trades from the trade room. So this one touched me the most because it was directed to me. But this is someone that joined this month in June, and this is a 10K account, and they're up almost 1,200 for the month, right? And this part really got to me, was like, thank you, I might not have to go back to work with lockdowns lifted. That's the whole point of this, is financial freedom. So for someone to say, hey, if I keep this up, and if we keep this up, I don't have to work again. They're making 1,200 in the first 10 days of June. That's absolutely fantastic. Now, I did say they reduced the lot size a bit, but again, when you get consistency and you follow people who've been doing this for such a long time, it tends to make your path a lot easier. So if you're looking to, be one of these members, if you're looking to see these type of gains in your account, right, you want to be like us and make these gains and learn how to trade and be in a community that wants to grow and learn. It's very simple to join, and we've made it so cheap. We're actually giving off 50% off your first month. So if you use this code FIRST50, your first month in the Forex trading room, which includes all the live sessions Monday through Friday, all of our signals, and extra analysis on Discord. So we have, majors and minors analysis. We have different channels. We have traders who do, For example, we have traders that do, where did these guys go? Yeah, we have traders that do Elliott wave analysis. For example, here you see all this Elliott wave analysis. You have some more price action based. You have institutional trading. It's all there, and it's all for $48.50 for your first month. So to get on there, all you have to do is go to forexlens.com and then go to Forex Trading Room. Click Get Started. Fill out this form. It will take maybe a minute of your time. Click Next, and at the bottom of your cart, it will say Enter a coupon code. Enter first 50, and it'll only be $48.50 for all this content. And you're gonna get access to all of our signals. So we have 10 signal providers. Can you imagine that? That's a lot of content. You don't have to follow everyone. You can just try out a few and figure out which one fits your time zone, your trading style, and you follow them. So you have Ichimoku signals, price action, my signals as well, and they're offered on Discord and Telegram. So hopefully I see some new faces on Tuesday. We have another free session on Monday, so if you're still on the fence about join on Monday. But hopefully I see some new faces on Tuesday and I hear more success stories. Again, those things make our day. And I hope everyone has a great weekend. They're safe. If there's any other questions you have or pair recommendations, send them on Discord. I'll be happy to help. But with that being said, guys, hope you guys kick back, relax on the weekend, and we'll be back again for an exciting week next week. So peace, and I'll see you on Monday.